Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everyone's favorite topic, which is, of course, sales tax. Today, my co-host, Ellie Moffat, will be interviewing me about Canadian sales taxes. But before we begin, let me introduce Ellie to you.
Hi, everyone. Really great to be here. I am very excited about this topic today. But first, I want to do a quick introduction for Sales Tax and More here. Sales Tax and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, and like our name states, more. We will give you plenty of ways to reach out to us if you have questions about our services. Please don't hesitate to reach out and ask. We will get those questions answered right away for you. So Mike, I know many of our listeners are selling into Canada. Is Canadian sales tax something that U.S. sellers need to worry about?
Great question, Ellie, and one that we hear quite often. And the answer is so often as it is when it comes to sales tax, it depends. It depends.
Our favorite answer.
Yeah, our favorite answer. It depends on your specific facts and circumstances. If you have nexus in Canada, and by the way, Canada does not use the term nexus. They use the term carrying on business. If you're carrying on business in Canada, then yes, you are required to get registered, collect and remit the taxes. But unlike the US, there's also an economic reason why you may want to get registered in Canada. The primary tax there is a value-added tax. It's called the GST, or Goods and Services Tax. And if you're selling into Canada and you're the importer of record, there's a type of this goods and services tax that you are paying as you cross the border, even if you're not registered. You know, some people are paying it without even realizing it because whoever's doing their shipping or, clearing customs for them is paying it, and then they're invoicing you for it or your client for it. So this is 5%, and that's a hard cost. Now, the only way to, or the best way to get that back is to do a voluntary registration. And once you are voluntarily registered, or, once you're registered at all, doesn't matter if you do it voluntarily or if you're required to do it, but you get to take a credit for any tax paid in the normal course of business. So that 5%, which was a hard cost, is now reimbursable. When you collect tax from your customers, you're going to pay yourself back for any tax you paid in the normal course of business. That's called an input tax credit, or in Quebec, it's called an input tax refund, ITR and ITC. So in the U.S., compliance is mostly a cost that we're required to do. And, it's cheaper to be compliant than it is to have a state come after you. But in Canada, there could be a reason that we want to go out and register voluntarily. It could actually save us this 5%. So if you're carrying on business in Canada, that's basically if you have nexus in Canada, you should be thinking about getting registered. And if you are the importer of record, if you're paying that cross-border tax, this GST, as you clear customs, then you should think about registering also.
So Mike, I know you touched a little bit on the differences here, but I really want to highlight it. What are some of the major differences between the US and Canada?
Okay, well, the biggest one is that there's two levels of tax. You have a tax at the federal level, which is the Goods and Services Tax, or GST, and it is a value-added tax. And what that simply means is that taxes paid at every step of the supply chain. So, there are virtually no exemptions. I mean, even if you're selling to someone who's a reseller, they pay the tax. Now, the way that they avoid double taxation in Canada is by allowing these input tax credits. So remember we said whenever you get registered, you're allowed to take a credit and pay yourself back for any tax you have paid in the normal course of business, any value-added tax that you've paid in the normal course of business. So that's one thing. They also have local level taxes at the province level, and the provinces are the equivalent of U.S. states. So some of the provinces are going to be value-added taxes, and some of the provinces are going to be actual sales taxes. But the big difference there is you've got this federal level tax, and once you register for it, it's got to be collected on every sale, no matter where it goes. There are a couple of zero rated goods, and I'm not going to get too deep into that. We don't have too much time, but we do have webinars that get into this a little bit deeper. So I encourage you to check those out. We just want to stay big picture here. So as we mentioned, virtually no exemptions whatsoever. Unlike the U.S., there only one instance where you might use a certificate, and that's with indigenous peoples. And the way that you prevent double taxation is this input tax credits. You may have to, because there's two levels of tax, you may have to have two separate taxes stated on an invoice, because one is going to Revenue Canada, which is the IRS Canadian equivalent, and the other is going to the local jurisdiction.
Okay, Mike, thank you for going over those for us. And does every province have a local tax then?
No, they do not. There are actually 10 provinces in Canada and 3 territories, so a lot less than the United States. And once you register for the goods and services tax, that's the federal level tax, you're automatically registered in 5 provinces for what's called the HST, or harmonized sales tax. And the reason it's called harmonized is because 5 provinces have said, we want to make life really, really easy for everyone selling into our provinces. So we're going to make our tax the same as the GST. We're going to harmonize it with the GST. We're going to let Revenue Canada collect it. We're going to let Revenue Canada automatically register you. And when you file your return with Revenue Canada, you just lump all the tax together and pay it to Revenue Canada, and they'll make sure we get our money. So it really is fairly easy. So you've got the 5 HST provinces, which are going to be Ontario, Prince Edward Island, Newfoundland and Labrador, Nova Scotia, and New Brunswick. So those are your 5 HST. Then you're going to have British Columbia, which actually has a sales tax, and it's called the Provincial Sales Tax, or PST. Saskatchewan, another province, has the Provincial Sales Tax, or PST. Manitoba has the Retail Sales Tax, or RST. And British Columbia, Manitoba, Saskatchewan, those are all regular sales taxes, pretty similar to the U.S. sales taxes. Then we've got Quebec, and Quebec is the Quebec Sales Tax, or QST, and it also is a value-added tax, and it's pretty much identical to the HST and to the GST, except instead of, some of the terminology is a little bit different, but it functions the same. Instead of having an input tax credit, or ITC, they have input tax refunds, or ITRs. But for the most part, the Quebec sales tax is the same as the GST and HST. Alberta does not have any local tax. They're rich in oil money, and they didn't feel they needed a local tax. And the 3 provinces don't have local taxes. So it's just the GST in Alberta and the local provinces. So if you wanted to get registered everywhere, there's a maximum of 5 registrations that you could do. That's the GST HST, that's one registration. The BC PST, the Saskatchewan PST, the Manitoba RST, and the Quebec QST.
Thank you so much, Mike. Okay, so I hear a lot about a small seller exemption of $30,000. Can you tell me a little bit, can you tell everyone, tell us all a little bit more about this?
Yeah, we again, this is something we hear quite often, and 2 things. Number one, you've got to remember that it may be a benefit for you to get registered, even if you don't have to. But this small seller exemption, widely misunderstood. It's really for Canadian sellers. It's not for foreign sellers. I mean, it could apply, but when you look at that, it says $30,000 of worldwide sales. So if you're in Canada, maybe you have less than $30,000 in sales. But if you're in the U.S., your U.S. sales count if you're in any country. And before beginning to sell in Canada, most of the people I've ever talked to have much larger sales in the U.S. than when they're starting out in Canada. So that $30,000 exemption is worldwide sales. So generally, it will not apply. It's for small Canadian sellers for the most part.
All right. Okay. You mentioned carrying on business to be a Canadian equivalent of Nexus. Can you explain that? Can you share a little bit more about that?
Yeah, absolutely. Let me pull up an actual list here of exemptions. I mean, of examples of these factors. I don't want to misquote, but there are 12 factors that Canada puts out, and not any one of these factors is going to create Nexus or make you be carrying on business in Canada. You know, the thing about Canada, if you thought the U.S. was gray and that they didn't really tell you what creates Nexus or not, when you see Canada, you are going to say, wow, the U.S. is black and white, because we know that some items, just having one activity in a state can create Nexus. But in Canada, it's so different. You have to analyze all of these factors, and you could have 2 companies with the same exact fact pattern. And one company, they all have the same factors, and one company is one industry, the other company is in the other industry, and one has Nexus and one does not. So Canada is pretty gray. Now, some of the factors, the place where agents or employees of the non-resident are located. So if you have people in Canada, then it's generally going to be a good sense of you having Nexus there, because you're going to be delivering. The place of delivery is going to be in Canada. If the place of payments in Canada, the place where purchases are made or assets are acquired, the place from which transactions are solicited, the location of assets or an inventory of goods, the place where business contracts are made, the location of a bank or a merchant account, the place where the non-resident's name and business are listed in a directory. So if you are in a telephone book, virtual or, physical, the location of a branch or office, the place where the service is performed, and the place of manufacture or production. So those are all the different factors we have to look at. Let's use Amazon as a quick example. If we look at Amazon and the FBA program, number 1, you've got inventory in Canada. Number 2, the place of delivery is generally going to be in Canada. The place from which transactions are solicited is in Canada. The merchant account is going to be through Amazon. That's in Canada. So you can see, these start to stack up. And the more factors you have, the more likely it is that you're going to have Nexus or be deemed to be carrying on business inside of Canada. And by the way, The Amazon Canadian program, if you're an FBA seller, is creating Nexus. You are carrying on business if you're using the FBA program inside of Canada.
All right. Thank you so much, Mike. Okay. So does Canada pursue sellers for non-collection? Is this something that everyone needs to worry about?
Yeah, absolutely. This is a big question. Now, Canada is nowhere near as aggressive as some of the states, and the provinces the same way. But they do pursue you if they do audit companies, and the rates in Canada are a lot higher than the rates in the U.S. I mean, we're looking at anywhere between in most of them. Alberta may only be 5%, but in the other provinces, 13 to 15%. So that's a big number. You don't want to be paying that out of your own pocket. So yes, Canada does pursue sellers for non-collection. And we hear that Revenue Canada and Amazon are in talks, and that we may see a lot more crackdown on Amazon sellers by the Canadian government.
Okay, and Mike, thank you so much for going over this stuff today for us. Do you have any closing comments, anything we can leave our listeners with?
Yeah, as I mentioned earlier, we've got a webinar. It's an hour-long webinar. It also provides for CPE credit where we go into this in a little bit more detail. We also can help you determine if you are carrying on business in Canada. If you need registrations, we can help with registrations. If you need returns filed, we can help with Canadian returns. So we have a lot of services around Canada that can really help you out if you need them. We also have the educational materials. And my final comments are, remember, if you have a requirement to register in Canada, you should be getting registered, but also check and see if you're paying this cross-border tax. If you're selling through Amazon, you got a requirement. But if you're selling through your own website or selling through different channels, and you're paying this tax as you're clearing customs, then you'll want to go ahead and voluntarily register to collect the tax. Now, if you're not carrying on business and you're not paying you're not paying any tax clearing customs, no reason to register. Don't worry about it.
Thank you again, Mike. And I want to reiterate that we get great feedback on that Canadian sales tax webinar as well. So if you want a little bit more on this, I really encourage you to go to that. And if you have sales tax needs, just want to put out there again that we offer many solutions and services. You can reach out to me directly at emoffat@salestaxandmore.com. That's EMOFFAT at salestaxandmore, all spelled out, .com. Or visit our website, www.salestaxandmore.com. In addition to our services, like we were saying before, we have other webinars as well. All of them have CPE credit and a lot of resources on our website that are paid and free as well. So thank you, everyone, and hope you join us for our next podcast. And have a great afternoon.
Thank you, everyone, and hope to see you or hope you join us on our next episode of the Sales Tax and More podcast. Bye-bye.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.